Welcome to the channel. This is your host, Paul, and today we're going to be discussing the different brokerage account types. And I'm going to be covering the individual brokerage account, the Roth IRA, the Rollover IRA, and the premium saving account, as well as the custodial account. Alright, so let's get into it. Disclaimer: trading has considerable risk. This information should be viewed as entertainment only. Please consult with a licensed financial advisor for all investment needs. So first up, the individual brokerage account. So this is the account that you're gonna deposit post-tax money into, and you're gonna buy different things such as stocks, exchange traded funds, or ETFs, or mutual funds. So the way the taxes work on this, if you buy something and hold it for a year and a day, you'll get taxed at a lower rate or a long-term capital gain rate. If you hold something for less than a year and a day, you're gonna get hit with that short-term capital gains rate, and so that rate is significantly higher than the long-term capital gains rate. So you're able to, with this account, deposit and withdraw money as you please. I'm going to use this account more for definitely still wealth building is the primary tool, but say I want to take a trip. I may come in this account and I may hit a couple options trades, and I may use that money to pay for our trip. So the Roth IRA. So this account right here is a form of a retirement account. And so you also use post-tax money to make contributions into this account. And so in 2024, the limit is $7,000. So you can contribute $7,000 of your money into this account every year. So the good thing about this account is all the gains grow tax-free. You can buy and sell within this account as you please. And a cheat code for this account: once you learn how to trade options, you can get off big trades and all your gains are tax-free, even if they exceed $7,000. So that has nothing to do with all of the gains that you get off the trades that you make. And you are penalized for withdrawing before the age of 59 and a half. And maybe one downside to this account: if you make more than $160,000 with your W-2 job, you may not qualify for this. But I really like this account, and I want to point out why I think this is important. So back in the day, pension funds were the primary retirement tool. But companies started realizing that people were living longer. The 401k came out, and and companies were understanding like, hey, we can't afford to keep paying people. So what do? They slashed the pension funds, left the 401k. But the issue with the 401k is it was never designed to be the primary vehicle for retirement. So you have to do something else, whether that's open up a Roth IRA and making contributions or buying real estate. But in this video, we're going to kind of stick to just the stock market as a whole. The next account is called a Rollover IRA. So you have to understand that assets are sold off and received as a cash balance, so you must actually invest the money that's sitting into the account. So what I mean by that is, if you have say you work multiple different jobs, you probably have different 401ks sitting out there, and you want to consolidate all those and have them in one account. This is what you would open up: the Rollover IRA. And so the company, they're going to sell off all the assets. They're going to give you a big cash balance, but you have to remember, you have to buy something with that. So that's why I kind of teach the starting five method, just doing a couple of ETFs and maybe just a couple stocks here and there. I want you to put the power back in your hands. Or you can pay a small percentage and get this account professionally managed. But I just believe in just taking the power, like I said, into your own hands and invest in yourself. So you can consolidate past 401ks or 403bs all into one account. The next account I want to talk about is the premium savings account. So a lot of brokerage accounts or a lot of these companies that we go through to buy and sell stocks, they're starting to allow a option to open up a premium savings account, and it's essentially just a high yield savings account. Currently in 2024, the average rate is around 4% for these accounts, and I like to use these accounts to take advantage of investment opportunities. Say there's a big dip in the stock market, I may go into this account and purchase a couple shares of a company, or something I might start getting into pretty soon, I may start using portions of the account to buy rental properties. And then as we look, the national average for a checking account in 2024 is around 0.4%, which is a lot less than 4%. And this account does have monthly withdrawal limits. So you can't just be taking money in and out of your account as you will. You can make as many deposits as you want, but you have to be careful with how many times you're withdrawing out of this account. And the custodial account is great for getting your children started in investing. So this is going to be an individual brokerage account that you invest post-tax dollars into with the intention of transferring over to your child once they become of age. A lot of times the age limit for this is about 18 to 21 and just kind of depend on the state that you live in. There's no contribution limit and allows up for $15,000 to receive an annual gift tax exclusion. So as long as you're not going over that $15,000 per year, you don't have to report it to the IRS. And then once your child becomes of age, you can attach debit cards and checking accounts to this. So this is an account that I have currently set up for my daughter, and that's what I plan on doing. Once she becomes of age, probably buy her first car with it, or get like a rental property for her to stay in while she's in college, and just kind of go from there. So in conclusion, you want to simplify this process. If you can, you want to automate your investments whenever possible. You want to dollar cost average. So what do I mean by that? So when you go in and you're buying a stock, don't really look at what the price is. Yes, I will eventually teach you how to select stocks at the best price, but you're just buying every month, every week. Whatever you can do, you're just buying the same things over and over, no matter what the price is, with intentions of holding for 5 to 10 years. That's the key, long-term holding. And I talk about my starting 5 here, the 2 ETFs and 3 stocks. That's what I like to do. Just keep it simple. And that concludes the presentation, but I do want to hop over just to ETrade and show you all how easy it is to open up these accounts. So hopping over ETrade, all I did was log in, click different brokerage accounts, and here we go. We got the individual brokerage, got the premium savings, the rollover IRA, the Roth, even have the custodial account right here. So a lot of these accounts are very simple. You just click on them, go through the steps. They're just going to ask for your personal information, and it's just like simple setting up a bank account. So we reached the end of the video. Thank you so much. Please like, comment, subscribe. See you next time.